Hey everybody, it's Booksy. Today is Monday, December 27th, and I'm going to be doing an AMC stock fractal analysis for the day. If you're one of these folks that just doesn't like the long videos, then either buckle up or go ahead and peace out, because got a lot to go over today. And I don't know, I appreciate the comments, I really do, but I'm getting comments like every single video that they're just too long, and I think people just misunderstand that this channel is not really meant to be like a magic bullet every day. I'm really trying to do a fractal analysis, and I'm also learning. So every day that you come here, the expectation should be, you know, I want to learn about fractals and see what new stuff we've discovered today. It should not be, I want Booksy to tell me price targets every day, and I want Booksy to be some kind of a stock guru for me for AMC and tell me that we're going to go to the moon in a minute. We're getting there. We're getting to a point where I think we're going to be moving back into previous trading ranges, and this was something we've been talking about for a month or so now, ever since we really started figuring out what was going on with this spring. But yeah, I mean, I don't know. I've only been doing this for a month, and my main purpose for this was education and to share with the community like what it is that I was learning, and it's starting to sort of turn into something that I didn't want it to be, which is some kind of a weird fortune ball stuff, like, I don't know, fortune telling stuff. Like, I have people that try to reach out to me on Discord and ask for price targets and all this crap, and I'm like, look man, I don't know price and dates, but I am doing a lot better at understanding the fractal movement, but people don't really seem to be interested in that. So let's jump right in. Lots to go over today. I have a lot of people who are like, hey, it's the same fractal. And I'm like, yeah, but it is. I didn't expect it to be such a massive dip. I don't know if y'all were looking at me on Twitter, but I had posted like a spring, and then I actually thought there was going to be another spring. I thought it was going to happen where it did at the end of the day today, like over here. And I expected this to be a pretty mild spring this morning, not plunge, you know, to the depths of Hades, almost as far as it did over here. And not quite as far, and that's important because we are looking at this as if it's a gigantic sort of a cup action. Right? And I've talked about this fractal a lot recently, that when you look at and examine a T3, you do typically get these sort of big, if you look at the volume spikes that happen before and during, you get these sort of double push-ups where you get this push, this push right here, all right, and then you get another push. And specifically, I've been looking a lot at the region of August. That's kind of my favorite region. There's just a lot of volume and everything's spread out, and I like it. And to some extent, the T3 here is sort of useful. It definitely gives you that sense of a push. There's several push-ups here, okay, but there's specifically one right here that mimics this price action quite a bit, where you get a push-up, you get sort of a bottom test, another push, and then you get a spring action. You don't get a double spring. But then again, this is this is a 15-minute right here, and there's not a lot of detail, and this is a 1 minute, and you're seeing like every little tiny move for every minute. So the idea that this is like a push down, I mean, you do have almost a double bottom here, a double spring. It's not that big of a deal. I don't really see it as game-changing or anything breaking. If this had pushed below, you know, it may have been a little more of a worrisome day, but it didn't. And what's interesting also is that unlike what we saw on Thursday, this price action being very, I don't know, it's sort of hard to sort of interpret this as anything except for like a simple, you know, iterating down to a spring. I do see there is a little bit of a head and shoulder here, but it's not well defined. And today we had really well defined shoulders. They were so well defined that they essentially just gave us a perfect, you know, one-to-one with the macro view here. And that's kind of what I wanted to start with today. So I was watching this play out, and almost first thing in the morning, I was like, hey, that's our fractal. So you can see the little platform here with the drop. You do have a bit of a double drop here, although this one on the second drop, depending on how you look at this could be the first drop and this could be the second drop, like this and this. I don't really think it matters too much. The point here is that you do get that that platform, right, that appears, and then you start your run up. You also get this sort of a push really, really high. I don't know if you saw this candle, and then you get this sort of secondary push that doesn't go quite as high. There's not really a one-to-one with that on this. If you zoom way, way in, you might say it's like this sort of T1 looking action right here. Again, it's a microfractal. It's not super important if it's perfect. You take it with a grain of salt. Microfractals are not about perfect one-to-one. What you want to look for on a microfractal is what I'm showing you right here, which is general price, how the price is traded around specific key points. So one of the specific key points we've been talking about on this channel is this R1 zone. And the R1 is a liquidity test that happens opposite this goofy looking head and shoulders. And the reason that it happens opposite is because you get these segmented fractal iterations that occur in specific sections. Usually it's like these two hooks right here in between them. I'm not going to go over that right now. I went over it in a video when this happened on December 9th or whenever it was that I made the video. So definitely check it out if you want to know what I'm talking about with the segmented fractals. And all it means is that basically that this is not completed until we pass back through the zone, and you'll get a major liquidity buy-in when you move back through this region. The accumulation is not completed until you pass through this zone. Another way of looking at that is simply like an SOS, like when you come out of a Wyckoff accumulation, if you're into that, this would be your SOS region, okay, where you're coming back out of the region where you started. We see this everywhere in the stock. This is not just one place. So if you're looking for further proof, you can look at it right here. This is the R1. This is the T3. All right, this is the lower accumulation range once you push down, and then when you break out, you start a run, and that ends eventually in a distribution, okay, up top. Same thing applies in this region. I mean, it happens over and over and over again in this stock, but here you go. Here's your run. This is the weird looking head and shoulder thing that's on the opposite. Sometimes it's really obviously a little head and shoulder, sometimes it's not. This one's a lot larger, it seems like, but there's actually, I'm looking at a more pivotal level, like right in here with those little horns, and then the drop. So that being said, okay, that's the R1. I've been talking about this for a long time, and how once we get up to this level that we're expecting to see a break through this region, and specifically from about 31.5, more like 32, because we already pushed over 31.5 once and nothing happened. And I think it's more of a range, right, where this sort of completes, and this was just sort of a fake out that completed this head and shoulder pattern. All right, the touch points 1, 2, 3. So then we just need number 4, and then it's go. My point is just that this region is going to be a hot zone for pushing through. And I had marked this out a long time ago, and I talked about, way long time ago, when we were in this region, and I just saw like, oh, this is the head and shoulder. I said that I think that the T3, which is this region right here, okay, will set up right underneath where the R1 is. And originally I suspected that it was some kind of a breaking point here or here that would trigger the R1. But when we saw the fractal iteration, I realized that, okay, maybe it's actually a lot higher, and it's a little bit of both. So you did get a lot of triggers that happen from here, this $24, $25 range, all the way up to 31. A lot of triggers, and we saw them play out. I don't know if you were watching on the days I was tweeting about it, or if you had followed the videos, but the liquidity spikes as they hit these triggers that I had set up was pretty absurd. And by the way, I don't know if it's necessarily that the algorithm, I think there is code involved, and the algorithm is like finishing the code when it comes back to that region. I actually believe that. But I also think that So there's mathematics behind it. But I also think that it's just a signal that's something that other traders, like other institutional traders, would use. So they, like, once it hits this particular level, they're going to say, okay, it's signaling to buy because it means that we're going back up. So some of it's mathematical and some of it's pretty straightforward and simple. Some of it is algorithmic. Some of it is just, hey, set a limit order, right? Or something like that, okay? Something really basic like that. But yeah, so we had set these up a long time ago. We never broke through it here. And originally I had suspected that this was partially this shoulder, okay? That I thought there was going to be a smaller shoulder and that we would set up a larger head and shoulder much higher. The reason that I suspected that was because if you were to track it this way, all right, there's these parallel lines. You see them all? And to some extent, the parallel lines are playing out. They're just playing out on a lower time frame. And I thought, well, maybe that's what would happen. It turns out that after we broke this range, we kind of came back and, and we retested this trend line a couple times. And that actually is what set us up for the shoulder. So I was wrong about that move. I thought the R1 was going to get us there and then we'd have a major retrace. Instead, we set up right beneath it, all right, like a good little T3, okay, like this test right here, set up right beneath that range, okay, and then we're going to push through it, hopefully in the near future. So what we saw on the micro today was just a reflection of that same trading pattern, all right, really simple. So it's set up, okay, it's almost one-to-one. You've got the spring here. You have, in this case, you see how this is like a long, drawn-out fractal that's more sideways than straight up. That's okay. Again, this isn't meant to be like perfect. We're talking about generalities when we talk about micros. The point is, where was this R1 zone? The R1 zone would have been somewhere between the topmost point, okay, topmost point, and then that cliff. This is the first cliff, and then there's the second cliff. So I put these markers there while we were down in this region, and I'm not going to go through all the tweets and junk that I posted, but basically I was watching this head and shoulder form, and originally I thought this was the shoulder, and then as it was forming, I was like, no, I don't think so. This is the first push-up right here. This is the track down right there, and then we have a bigger track down that happens later that really is the thing that forms the shoulder. And then after that, you basically have a retest of this line, all right, this being a curve, Bezier curve. I know that this is not the most popular of my tactics so far, but I actually think it's probably one of the most important. I've talked about this in other videos, and I did some work with it today as well. I'll show you in a few minutes. But this is something that's really important, I believe, to this whole thing. So anywho, R1 zone, as soon as I hit the R1 zone, I was looking at volume, and sure enough, every time it passed through one of those triggers, all right, you got a major volume spike. Now, if you might be asking, Booksy, if you strip away those triggers, what else is there? Could you make the argument that this is some kind of a level of support or resistance? And the answer is, yeah, you can make that argument, and I think that's valid. I think there's some of these that don't make a lot of sense. This one in particular, you know, you'd have to be looking at this previous touch point, and beyond that, there's not a whole lot there to argue that this is some kind of a previous touch point. But regardless, whether you think it's because of the head and shoulder action breaking out, or you believe what I'm saying about these triggers, it doesn't make a huge difference to me. The point is that this setup is done so in a way that it's meant to complete it, and then once it does, it finishes this larger fractal here, which is the complete fractal, right? Where you basically get the sell-off into an accumulation and then into a distribution at the top. So I was watching this go off, and I saw these big old candles popping, and I was like, well, that's great. You're seeing the R1, you're seeing the R2, this would be the R2 over here, which pushes up, and then the R3 and 4, right? That kind of dwindles, and then it starts selling off. And then at that point, everybody's panicking on Twitter because I posted this and everybody's like, uh-oh, that means that we're going to just start distributing. And I said, no, not necessarily, because this is essentially, if you zoom out a bit, all right, what this could be acting as is basically an SOS, where you have a sign of strength at the top of the trading range. In this case, our trading range, it's almost perfectly aligned. Okay, and you have a sideways action, and then it starts to sort of taper down and goes into another iterative spring. And the day ended almost exactly as it started, where you have another inverse head and shoulder setup. And it is the spring of the fractal. And you have a lot of buying power at the end of the day. A lot of big candles. Now, the weirdest part of the day probably was this spot right here, right around exactly, I think it was not to the minute, but it was almost right at 3 p.m. There was this major sell-off. And to sort of talk about that just really briefly, basically, if you're watching this stock and you want to know like why these major liquidity actions happen seemingly out of nowhere, you can bring up the EMA, and you can do an EMA at 20 and then one at 200. And so if you do one at 20 and one at 200, I'll just add another one. Oops, I didn't want to add two. If you do one at 20 and one at 200, and shout out to Father on Twitter, because they're the ones that tipped me off to this. Oh, maybe I didn't do it right. No, I did it right. If you do this, what it means is basically when the stock passes below one and then the other, it triggers shorts to buy in. Like it's a signal for shorts that there's weakness, and so they're more likely to jump in. So a lot of shorts, this is, if you look up short strategies, this is one of the major short strategies, is like when it crosses either the 200 or the 20. So you see where these spikes are, they're actually like right where the stock really pushes down below one of these ranges. So I think that might be all there is to that major spike that happened. But yeah, this was totally in a, like this is the step down, all right, into the major spring action. It's the same as this step down right here. So the expectation was, yeah, we're going to run up and form a shoulder, and then we did. So does that mean we're going to run first thing in the morning? I'm not sure. I would hope so. If the fractal continues the way it is right now, then yes, it should. Because it did here. Okay? And it's going to here, I believe. So this for me was a lot of confirmation that, yeah, like this is what the expectation is going to be on this action. Like when it pushes into the spring, it forms an inverse head and shoulder. This is not the first time this has done this. This is the third or fourth time I've pointed this out. But it's happened on these micros frequently. And it's telling you how the institution or whoever's driving this thing is trading through this region, through this spring region. This is how they're doing it. So it makes sense that it would also reflect on the macro in much the same way. Does it have to? No. Of course they could throw a curveball and make everybody upset and call Booksy a fool. But at least right now, right, until it stops working, I've seen these patterns repeat. All right, so let's talk about this line, and let's talk about this ridiculously good setup. All right, so first of all, if you're looking at this setup, I'm going to show you a couple different things today. I'm going to show you this right here. This is the same chart, but with a speed line, and all this is a Fibonacci speed fan. All right, and I want you to notice that as it passed through the center region of the speed fan, there was almost no resistance. Okay, but you get a lot more resistance on the outer edges and then as you work your way in. Probably not surprisingly, I mean, I didn't draw this like perfectly, but not surprisingly, these two touch points, if you look, they actually really do follow quite well the speed fan. You can see I'm off by maybe a little bit, so maybe if I like widen the fan a little, I would hit these outer points a little bit better, but nevertheless, let's just say standard deviation, you know, exists, because it does. Yeah, these are really good touch points. And I think this bounce right here, I've seen this kind of stuff before on AMC where it bounces up or down on the stock like this, okay? Yeah, it's very typical of a speed fan. And the reason why this stuff works is not because I say it works or because there's perfect math to it, even though Fib does have like really, really perfect math. It's really spooky. The reason this works is because other traders use this to help define the way that this might move. And basically, this is a way of predicting possible support and resistance levels on the stock. So the fact that this bounced here and now it's above, all right, this particular speed line here is a really good thing. And I believe this is the 618, going obviously on the opposite side of this. So it's on both sides. So yeah, it got above the 618 here. So it doesn't look like we did anything today. It looked like a repeat, but we are higher just slightly, and we're set up in a fractal to move farther. What this is right here, let me hide this for just a second so it's easier to see. All right, this is a projected move back to the top of the range. So if you look at just the top of the range here, you can kind of see like how this thing might be setting up. And I've talked about this before, but the T3 movements, they like to set up breakouts right beneath the 618. It's not perfect all the time, but certainly if you look at this and you say, okay, let's say in the future, we look back at this move, what are we going to see? Well, if you take a Fib fan or a Fibonacci sequence, right, and you run to the top of any given move, you'll see that the Fib levels are pretty well respected. All right, so clearly, like in an algorithmic sense, and you could look at them, nah, not so much on that one, but definitely on this one. I mean, pretty darn accurate there. They are respected when you look back. So it makes sense that if a move is going to happen, that you wouldn't want to use this as your only predictive measure, that it's possible that it would have stopping points at these, if you know kind of where the target is, and the target in our case is around 32, but then ultimately up to the top of this region. All right, and so if we go into like 32.50, all right, maybe it doesn't work quite as well. But if we were to go to, let's say, the top of this region, I mean, it's pretty darn close. It definitely bonked its head right at that level. So from the bottom here, okay. So that's another way to look at this, and certainly it seems to be lining up quite well. All right. Another way to look at this would be doing what I did middle of the day here. But actually, I'll use this chart because what I did is I did a fib extension. So let me go back to this one. This is really messy right now, and I want to show you that at the end. So let's take a look at this, and let's do just a simple trend-based fib extension. So we just go from the bottom to the top to the bottom. Doesn't have to be perfect. And there you go. So that's just one leg of a move. Okay, and yeah, again, you could draw it maybe just to this level if you didn't want to include be a little more conservative. You don't want to include the spring that happened here. But yeah, I mean, we're bonking our head on the 236. It's almost the same, right? And then what are some of the projected moves here? Well, the 618 is 32.90. It's right in that pocket that we've been talking about. It's almost dead center in that R1 pocket. In addition to that, if you were to look at just simple trend lines, all right, let's just draw some trend lines. Let's just draw some touch points here. I think it might actually be the outer one. I might have done that wrong. Okay, ignoring, you know, the extremity of this move, which clearly was a fake out, right? You do have a bit of a channel here, albeit not perfect, and maybe it's more of an ascending channel, slightly. Different ways to draw the same thing, I suppose. I kind of like that, but I like to sort of find previous touch points that make sense. Maybe that, not even including that, You're probably like, Booksy, why didn't you do this beforehand? I did. I have another chart. It's on the other chart. Yeah, maybe not surprisingly, if you look at the fib extension, we just did it, and you draw it. It's basically like a simple intersect, right, at 3450. If you were to move all the way up the channel again, like you did here, then you would have a move at least to 32. And I mean, if you hit that 32 and break it, that's a big level. That's where you're going to get your R1. You'll get the push up to 3450, no problem. So yeah, I mean, it's a pretty solid target right there if you're just going to move up this channel. And got to remember, not only does it complete what we're talking about fractal-wise, but it also completes this head and shoulder, which is very clearly there. So as soon as it breaks this point, not only are you getting what I would say are the R1 trigger setup, but I mean, almost right away, you're getting that boost from that, but you're also getting the boost from this breakout. You know, easy push to 45 or 34 from there. So it's almost a perfect storm. Everything is set up to help this thing move up. If you look at volume, let me go to a better chart for this one. Let's go back to this chart. It's easier to see, I think. If you look at volume, it's important to note that, yeah, we have a lot of red volume here. But look at what's going on with the green volume specifically. Okay, you have 1, 2, 3 major green bars. Then you have 1, 2, 3 red bars. And if you notice, there's sort of this bowl shape going on. But today sort of switched. So I know that, again, people are saying, well, this looks the same as this. It's very similar. But the difference is that the volume is pretty much like double. I mean, it's not, maybe not exactly double, but it's a lot. All right. And then if your goal is to trap more shorts into this play, then you trapped a lot of shorts possibly in these two plays. And these are people that are entering short positions, right? And basically, if this thing starts going up, they're going to cover because they're stuck. But this to me is pretty significant. If we start seeing that green volume come in the morning, I think you're going to see a push up. In addition to that, we're in a Wyckoff schematic. And yes, you did get a double spring of sorts. That's totally a thing in Wyckoff. You can look it up. It happens. But what we're looking at here is just the last point of support, you know, and then a move up to an SOS phase. And where would that SOS happen? Well, it would happen right around that, underneath that $32 range. I mean, everything is set up in a way that if they don't use this in a bullish manner, they would be throwing away like the opportunity of a lifetime to move this thing up. It would have to be like a clear, decisive, I want to move this thing down type move. And I know there's people that are still calling for that. I've already gone over the bearish scenarios. I know there's a possibility there. They're in other videos. I'm not going to go over them right now. Oddly, somebody said I was spreading FUD in the other video, and I was like, I don't understand that because I was being really bullish, but I guess they didn't watch the whole thing. All right, so let's talk about these arcs. This will be the last part of the video today. I told you it was going to be long, but I tried to go pretty fast. Information overload, fire hydrant. So, oh yeah, see, there was my channel marker right there. So I had talked about this previously, and I think I posted about it, and I even may have mentioned it on one of the videos that I tried to create an early version of this, which I just started like giving up on it because I wasn't sure what was going on with the stock, and I was like, well, it just doesn't seem like this is going to work out. I'm not really feeling very strong about it. And you might be like, well, where did you even get this from, Booksy? And I already sort of showed you, but in each of these ranges that we've been talking about, this is a present pattern. It's there all the time. And this pattern is pretty darn interesting. It is a pattern that is very consistent within a trading range. So this is the pattern. And this is the pattern that I believe is going to have the most predictive quality of any pattern in this stock when you see this setup. Because not only is this of like a perfect S-curve, all right, but it actually has possibly some markers that can make it more predictive. So one thing that I noticed is that this entire thing being like 56 days or something, and I don't think the bars matters as much on this one, but we can look at the bars. So in this case, you've got roughly 259 bars. And then if you look at dividing in half, 255. So, I mean, I could be off by a bar or two, but notice where the S-curve flattens perfectly. It's like directly in the center of this range. So my thought was, okay, this clearly follows this pattern, and you can find it on any of these ranges. Okay, they're all over the place on this stock. Right, they're not just in one place or another. Okay, there's another one right in this region right here. I don't have it drawn, but it's there. All right, it's right here. All right, it's the same curve. So the rules of this curve are fairly simple. Rule number one is that you have to have a defined trading range, like a bottom and then a top. If you can sort of estimate the bottom and the top, then you should have a good idea of where the center line is, because the center line typically falls somewhere, and this one I kind of drew it a little wrong, perhaps. It usually falls right around the 618. So you see the 618 is right here. So yeah, like these touch the 618 perfectly from the bottom to the top. All right, now this dip below is sort of an iterative spring action here. Looks very similar to what we just experienced today in some ways. But my point isn't like, oh, it has to be perfect. I mean, if you draw it from the very bottom, yeah, this is right on the money, but then this doesn't really have any bearing. So it's kind of a complicated issue. I'm not really sure I figured this out just yet. All right, so this is very speculative still. Nevertheless, somewhere around that 618 seems to be like a magic middle, okay? And then the other rule is that this curve, this part of the curve, has to be equal to this part of the curve. And that means that you can't have one half this curve be like this and then the other half be really flat like this. That's just not how it works. It's always the same. Even on like the more explosive actions, when you draw the curve correctly, it actually is perfect. Like the first half, the angle of that parabola, all that jazz matches the second half. So rule one, you have to have a bottom and a top. Rule two is that the angle of the first half and the second half have to be the same. And then generally that the middle is right around the 618. Right? Generally. It's not perfect. Not all the time. And it also depends on where you draw your bottom. Okay? So those are the first major rules that I've sort of noticed about this, and it enabled me to sort of draw it a little bit better. Another thing that I've noticed is that there's a secondary S-curve that flows from roughly around the T3 up through the second curve, and it acts as a supporting curve. And it's the same deal. Like this curve also has to look equally the same on either side. I think this would be more like this. Did you see how it rides it sometimes? Isn't that interesting? Okay. This is a different thing. I'm not really sure I understand this completely yet either, but I'm messing around with it. Okay, I didn't even do it here. All right. And then another thing I've noticed is that sometimes when you're working within limitations, you're not really sure about what you're looking at. You can draw two of them and kind of box in your t-test, and that can help you. Maybe if you're not really sure about how to best draw it, it seems to be really helpful. All right, so you're like, all right, well, that's interesting. How would you use that right now? Well, this is what I had drawn for the current move, is that my expectation was that we were going to move up, and I did the measured move, and I said, okay, well, if this is the bottom, okay, can I draw a measured move? And I did the best I could. I got it to the 618 as like the flat middle, and the target was like $42. And I was like, well, that's kind of cool because it's right in line with some of these other trend lines. And it also puts us right back up in the previous trading range without breaking out. So I was like, because that's a kind of a slick looking target right there. Now, if you did it from the bottom, and let's say you still have the same target, then the 618 is really, really low. See where it is? It comes down to here. And that has me kind of wondering if like maybe I'm supposed to be drawing this lower. I don't know. But I started giving up on this because when you look at the distance, bars wise, from here to here, it's 107. All right, and then here to here, 107. So this could come out like a little bit. It looks like we're just sort of running out of time. Like there's just not enough time to possibly break out, right? That this was somehow a failed attempt and it just didn't work. In addition, you know, it's hard to sort of imagine this working out. Like if it did break out here, and it could, right? If tomorrow, let's say tomorrow we ran to 34, where does that put us? Oh, this is going to be interesting, isn't it? Look at that. That's where we were. Oh, it puts us right beneath it. Oh man, that's super weird. Wasn't that what we were saying? Like if it can push tomorrow through here, it'd probably go at least to 34. Yeah, that would totally be interesting if it broke back through here and then came up and like tested this the last possible second. That would blow my mind. But I don't know. I sort of gave up on it. It just didn't look like we were running. It looked like we were running out of time. And so I started focusing more on this fractal. But then, you know, I started noticing today that what we had been studying was perfect. Like it was perfect. I mean, it was just a perfect setup. And I was like, man, if this is so perfect, why would they waste? And right. And so this is our thing here. Like, why would they waste? So this has me thinking that I drew it incorrectly on the macro, because this is obviously much wider. I know that. But it's like, this is perfect. Why would they not do it the same way one time? You know, would it just be to throw off old Booksy here? And it's hard for me to imagine that they would do that. Like, I just don't, we're not talking about humans, right? We're talking about like an algorithmic play here. So part of me thinks that maybe the reason that I have this so off is because I'm still thinking about this down here as T1, T2, and then this being all T3. And while I think that's a possibility, the reason that I drew that midpoint where I drew it, this is something that's kind of speculative. So I could do these in retrospect, right? By like measuring from these outer points in. And what I notice is that it hits on this weird like liquidity spike that happens on the T2. You see that very first liquidity spike on the T2 before it runs up into the mountain? This is the T1. All right, and then this is your T3 setup. It seems to happen on that very first spike. And so I was like, well, maybe that's just coincidence, but I went through and I checked all the ones that I could, and I'm only going to show you these two today. But sure enough, if you look, there it is. It's the first like kind of major spike, right, before the second one. I was like, all right, well, there must be something to that. Like that could be the halfway point. And you'll notice that these are scaled moves. So see how this one is much larger than this one? But that spike happened in the same region, the same halfway point. So I thought maybe that's what it is, and that's why I put my middle where I put it, which is right here, because I'm looking at the T3, and there's that first, or the T2, I'm sorry, and there's that first spike. But the thought occurred to me today that perhaps this is actually the first major spike, because even though this looks like a T2, it is a very small iteration, right? And certainly like this is a really major spike. It's bigger than most others. I still think this one is possible, right? If we just saw a big run tomorrow, then I would be like, yeah, this is the one. But if we didn't, I would be considering like maybe this is the right move and I'm not measuring this correctly. And instead of, and we'll know, right, eventually. So it's 247 bars roughly. Which is a little bit further out than I had anticipated. So yeah, more or less over here to December 31st. And I'm like, yeah, maybe. That actually seems pretty likely too. Look, that puts 34 right here. Let's say if it happened tomorrow or the next day. And then coming back down, we would have like a reaccumulation, which would look like the R1 fractal. Okay. And then we get the R2 and R3, and we push up above 38, and then we can sort of spend some time in this range here, right, between 38 and 43 or something like that. So this is a possibility that I'm exploring, and I'm not convinced that I'm, you know, dead on with it. But I wanted to share something else, which is that on a slightly larger time frame today, I noticed that this looked a lot like our macro fractal, like the big one. And you're like, Booksy, what are you drawing here? I will show you. So right here, I know this looks really bonkers. Okay, really bonkers. What I'm going to do is I'm going to hide most of these for just a second. I'm just going to show you just this movement. I'm going to hide most of that stuff. Okay, so what does this look like to you? Well, to me, this looked a lot like the macro, right? And by the macro, I'm talking about the full-on chart. Let me go to the 4-hour. Check it out. Okay, so if you look at this, I'm not going to be able to do a side-by-side, but you see how this tracks and then it breaks down, goes to the lower end, and then comes back up to the top of the trading range, which would have been right here, right? But it overextends above it. All right, see that? There it is. One more time. Flip back and forth. I'm sure you can see it, right? I know this is lower, but this is more realistic, whereas this was like a full-blown explosion, right? So this right here, this little cliff, this is the top of the expected trading range. So if you had shifted this all down, that's what would have been more expected. So I looked at that and I said, okay, well, can I draw a curve then from the base here up through it, from the base here up through it? And I just started playing around with S-curves, and I was like, yeah, I mean, there it is. It's not that hard to do. There it is, right? So the question is then, does this, and it would normally be like this, right? So you would extend above it. I was like, okay, well, is there a way that I could use that predictive modeling to kind of measure a move here? And so again, I looked at the fractals and I was just trying to play like, where is the middle of the move? And I couldn't really tell. I think this is supposed to be the middle of the move. I think it's close to it, but I'm not positive. And so here's the biggest error that I'm going to run into on this particular test, is that I'm not really sure that this is the dead center of the move. However, interestingly, I did measure it out, and I found that when you, and I'll talk about this a little bit more in a minute, these odd ones here, very beautiful. Looks like music notes wrapping space. That when you measure from the bottom to this middle, and you have to use that fib extension, and just estimating that, let's say right in the center of this range, okay, is the 618, all right, and it's sitting on top of the 618, just very conservative, okay, that this is the 618 that it just came back to touch, and then it's going to go on from there. So I was using this lower region as sort of a guide, an estimation, and I thought, well, is that something that's possible? What would the target be? And the target would be like 3120. Now, if for instance, we're looking at 3250 in that region, you can see that it's not super different. The biggest difference is that you have 618 at a little higher level here, more like right here in the middle. And then, of course, your price target would be much, much higher, around 3250. So then what I did is I decided that I didn't want to draw curves that were just super like wonky. So I had like, I think originally I had like this one and this one. And I was thinking that this is what's going on. It's trading in that range. This is the T3 fractal right here. And then it broke down into the spring, which is normal. But what I decided to do is I wanted to try to measure it with a GAN box. So I took a GAN box from bottom to the top, and a GAN box is just proportional sections. So you've got 2.5, 382, 0.5, 618, 0.75, right? And then it divides it a couple different ways. Now, this is not a perfect square. This isn't a GAN square. I could have done a GAN square. I did not. It looks more like a square when you do that. But the point here was more to just sort of like help me map this. And then what I did is I put another GAN box, again, just to further divide it. So all this does is help me proportionally divide it. So I put another one between the 382 and the 618. So let me get rid of the big one. So then I put another one between the 382 and the 618. So this is the middle section of the range, right? And I further divided that. And what I did is I essentially mapped, you see how each of these curves, if you scroll over these curves, you see how that touch point's right on the intersection? And then this intersection, this is kind of weird, but I did a horizontal one, and this is 382 in and 382 in, and I just did that to make it even, and it seemed to be visually the most accurate. So 382 is a fib level and or GAN level. I did 382 in to create these two, so then I have an intersect where you hit where the curve comes down from the very top, and they all share the same top point up here and the same bottom point down here. And they intersect on this line, this 382 line, and then also intersect right here on this GAN, which I believe, right, is between that 382 and the 618. So it's kind of a middle region. And it looks quite beautiful. And what's really interesting is that you see how it hits by doing this, right? See how this connects the same point as it does over here? Look what happens. It actually connects and hits each of these regions, and it creates these really beautiful connecting points on this grid, almost perfectly. And so instead of having sort of a haphazard curve, I drew a really mathematically precise curve. And that made things look really, really cool. Because now, when you look at this region right here, this looks like more of a battle, right? And then it pushes down. Right? You're way overextended, and you shoot back up like a rocket. But then you slow as you come into these middle regions, right? And there's a lot of touch points here. It's pretty interesting. I don't think that this is necessarily prescriptive so much as it is descriptive right now. You see how it kind of arcs up on this, though, almost perfectly? Almost like a speed fan. So the presumption would be if this can push up, I'm not saying it's not going to go straight up, but I do think that, you know, let's say it pushes up to 29 in the morning, you get a little SOS, and then you start running. It would be really interesting to see what happens as it comes towards, I guess in this case, like around 11 o'clock, something like that. Now, if my price target was way off, then it would be like up here. But the thing is this is based on this level and this level. So it's based on where it starts, and it's based on the T3. So I'm pretty sure about at least that much. I'm not so sure about this, the midpoint. If the midpoint's over here, then obviously that would change everything. But this is sort of my first attempt to really try to do something more predictive with this particular part of the fractal analysis that I've been doing. And yeah, this is really estimations, but I was just looking at, and this is not 151 bars, by the way. I think it was on the 1 minute or something. This is the same time frame, but then I was also looking at how high each went. I think I was looking specifically at, I don't remember exactly what level. Maybe it was that 618 level, right in the middle. Something like that, 8%, and then another 8% up to here. So measured moves. Anyways, that's all I got for you today. I'm going to keep playing around with this stuff, but hope you enjoyed, and I will see you tomorrow.